Did you know that in just a few months, 6 million Canadians could lose access to their bank accounts overnight? Imagine waking up to find your savings frozen, unable to pay bills or access your hard-earned money. It's a terrifying thought, but this nightmare could become reality as soon as March 2026. Why? What could trigger such an extreme measure? And most importantly, how can you ensure you're not caught in the chaos? This massive crackdown has been set in motion by new government regulations, targeting everything from tax evasion to illegal financial activities. But what's the real reason behind it? Are Canadians truly at risk, or is this just a scare tactic to grab attention? The truth might be even more shocking than you think. In this video, we're diving deep into the top 10 reasons why your bank account might be frozen, and we'll show you exactly what you can do to protect yourself. Stay with us, because this is information you cannot afford to ignore. Number 1. Government crackdown on financial institutions. The Canadian government has been stepping up its efforts to combat financial crimes, such as money laundering and terrorist financing, and the consequences could be severe. As part of a broader initiative, banks are now required to freeze accounts that may be involved in such illegal activities, even if the account holder is unaware of any wrongdoing. This policy could potentially affect millions of Canadians, leaving them unable to access their savings without warning. While the intention is to prevent the movement of illicit funds, the reach of these regulations is wide enough to catch innocent individuals in the process. It's not just criminal activity that's being targeted. With these sweeping regulations, banks will have more authority to monitor transactions than ever before. If any unusual activity is detected, whether it's a large transfer, international payments, or patterns resembling money laundering, it could raise a red flag and trigger an investigation. The result? Your account could be frozen while the authorities assess whether any laws have been broken. This could happen without any warning, leaving you with limited options and possibly significant financial disruption. To protect yourself, it's critical to stay informed and ensure that your financial activity is completely transparent. Banks are not only watching for criminal actions but also for any discrepancies in how you handle your money. If you are engaging in transactions that appear out of the ordinary, even unintentionally, it could jeopardize your access to funds. Do you think these government crackdowns are fair or too extreme? Share your thoughts in the comments. If this video was helpful, don't forget to subscribe. It only takes one click, and you'll never miss another important update. Number 2. Increase in financial monitoring. As technology evolves, so do the measures banks are taking to ensure financial transactions are legitimate. Financial institutions are now under increasing pressure to monitor transactions more closely, scrutinizing the origin, destination, and purpose of funds. This heightened level of scrutiny means that even seemingly harmless transactions could attract unwanted attention, especially if they appear unusual in nature. The days of simple transactions are long gone, replaced by advanced systems designed to catch suspicious behavior before it becomes a problem. Banks are now required to report large and irregular transactions, which means that if you make a significant deposit or transfer that seems out of place for your typical financial habits, your account could be flagged. What might be seen as a routine financial action for you could trigger an investigation. For instance, a large sum transferred from an unfamiliar account, or a sudden spike in activity, could raise suspicions. The process of reviewing and verifying these transactions can result in your account being frozen temporarily until further investigation is completed. To avoid being caught in this web of scrutiny, it's important to keep your financial activities consistent and transparent. If you're planning a large deposit or a significant transfer, make sure to inform your bank ahead of time. This can help ensure that there are no red flags raised during routine checks. Furthermore, avoiding irregular transactions can reduce the risk of your account being flagged for review and ultimately frozen. Stay on top of your financial history and ensure that all transactions are clearly documented and legitimate. What do you think about the increased monitoring of financial transactions? Is it a necessary measure or an invasion of privacy? Share your thoughts in the comments. If you found this video valuable, don't forget to subscribe. It's just one click to stay informed on crucial updates like this. Number 3. Criminal activity and account freezing. In today's interconnected world, even being inadvertently linked to criminal activity can lead to severe consequences for your financial freedom. If your bank account is tied to someone under investigation for criminal activities, such as fraud, embezzlement, or organized crime, it may be frozen as part of a broader investigation. This happens even if you have no direct involvement in any illegal actions. Financial institutions are under increasing pressure to cooperate with law enforcement agencies to prevent crimes such as money laundering, and that means they have to act quickly when red flags are raised. For ordinary Canadians, this could mean finding their accounts locked, without explanation, while authorities look into their financial activities. It's important to note that these measures are not just for large-scale criminal enterprises. Banks can freeze accounts for being connected to individuals or companies under investigation, even if the connection is only tangential. For example, if someone you know is suspected of being involved in a criminal case, your account could be flagged by association, resulting in the freezing of your assets. While the investigation unfolds, you could face delays in accessing your funds, leaving you vulnerable during a period when financial stability is most crucial. To minimize the risks, it's essential to stay vigilant about who you engage with financially. Avoid allowing others to use your account for transactions or activities you aren't aware of. Regularly review your account and be cautious about large or suspicious transactions. Ensure your bank details are up to date and always be proactive in clarifying any misunderstandings that might arise. Have you ever worried about your account being caught up in an investigation, even though you did nothing wrong? Share your thoughts in the comments. If you found this video helpful, don't forget to subscribe. Just one click to stay updated and protect your finances. Number 4. Impact of sanctions. Global sanctions can have a far-reaching impact, not just on businesses and governments, but also on individual citizens. If your financial activities or personal accounts are linked to individuals, organizations, or countries under international sanctions, your account could be frozen. In Canada, the government closely monitors transactions involving sanctioned entities, and if your bank detects even a small connection to these restricted parties, your account may be flagged and suspended. This is especially concerning in an increasingly globalized world where individuals often have international connections, making it easy to unknowingly engage with entities that are under sanctions. Sanctions can be imposed for a variety of reasons, including violations of international laws, human rights abuses, or other politically motivated actions. When financial institutions detect a link between an account holder and a sanctioned entity, they are often required by law to immediately freeze the account to comply with these regulations. This means that funds tied to these entities are effectively locked, and access to them is restricted until the situation is resolved. It can be a lengthy and frustrating process, leaving innocent individuals caught in the crossfire without any recourse or understanding of why their accounts are frozen. To safeguard yourself, it's important to be aware of the global financial landscape. Regularly check the list of sanctioned countries and organizations, especially if you are involved in international trade or investment. If you are unsure whether your financial dealings could inadvertently violate sanctions, consult with a financial advisor or legal expert who can help you navigate these complex regulations and avoid having your assets frozen. Have you ever wondered if your international transactions could put you at risk? Let us know in the comments. And remember to subscribe to our channel for more essential tips to protect your finances. Just one click to stay informed. Number 5. Tax evasion crackdowns. Tax evasion has long been a hot-button issue for governments worldwide, and Canada is no exception. With the Canadian Revenue Agency, CRA, ramping up its efforts to catch individuals attempting to avoid taxes, this could be one of the most significant reasons why your bank account may be frozen. If the CRA believes that you are hiding income, failing to report earnings, or using offshore accounts to evade taxes, they have the power to freeze your assets as part of an investigation. Even if you're unaware of any wrongdoing, simply being flagged in the system can result in your funds being locked until the investigation is complete. The government has made it clear that it is not taking tax evasion lightly. As part of an ongoing effort to increase transparency and ensure tax compliance, banks are under strict orders to report suspicious financial activity to the CRA. If your account shows evidence of unreported income or illegal financial practices, it could quickly raise red flags, resulting in a freeze while the authorities conduct a thorough investigation. The process could take weeks or even months, leaving you unable to access the money you rely on for day-to-day expenses. To avoid falling victim to this scenario, It's crucial to remain fully compliant with tax laws. Make sure you are accurately reporting all of your income, including investments and any other sources of money. If you're involved in a business, ensure that you're maintaining clear financial records and consider consulting a tax professional to make sure you're up to date on all regulations. By staying transparent and diligent about your tax filings, you can significantly reduce the risk of your account being frozen. Do you think Canada is doing enough to combat tax evasion, or is it overreaching? Share your thoughts in the comments. And don't forget to subscribe to our channel. One click to stay updated and protect your financial future. Number 6. Identification issues. In today's digital age, having accurate and up-to-date identification information is more important than ever. If your personal details aren't properly verified or are flagged as incomplete or incorrect, your account could be frozen by the bank. Financial institutions are under strict regulations to ensure they are dealing with legitimate individuals, and if there's any confusion about your identity, it could trigger a freeze on your funds. For instance, mismatched information such as an incorrect address, outdated contact details, or discrepancies between your bank records and your official documents could cause problems, especially if there's an issue verifying your identity. This is a growing issue, especially with the rise of online banking and digital transactions, where more and more people are interacting with financial institutions without in-person verification. If your bank detects any inconsistencies or fails to verify your identity through various checks, your account may be flagged as suspicious. The situation can become even more complex if your personal information is mistakenly associated with someone else's account or if there's a breach in the bank's verification system. The outcome? Your account could be frozen until the matter is fully resolved, and this could take a significant amount of time and effort to sort out. To prevent this from happening, it's essential to regularly update your personal information with your bank. This includes ensuring your contact details, address, and other essential information are correct and consistent with official documents. If you're moving or changing your name, make sure to notify your bank immediately to avoid complications. Staying on top of these details can help ensure that your identity remains verified and your access to funds is never interrupted. Have you ever experienced issues with your personal information affecting your account? Let us know in the comments. And if you found this video helpful, don't forget to subscribe. One click to stay informed and protect your financial security. Number 7. High-risk investments. High-risk investments, especially those that are speculative or unregulated, could be a significant reason why your bank account gets flagged or frozen. While risky investments like cryptocurrencies, stocks in volatile markets, or offshore funds may seem attractive for making quick profits, they come with significant regulatory concerns. Financial institutions are required to carefully monitor and report transactions that involve high-risk assets, and if your account shows dealings with these types of investments, it might attract scrutiny. Banks can freeze accounts linked to high-risk transactions, as they are seen as potential threats to financial stability or are associated with illegal activities like money laundering. Even legitimate high-risk investments, such as investing in startups or alternative assets, could trigger a freeze if the bank deems the activity too risky. For instance, if you're engaging in frequent trades of unregulated assets or if your account is used to facilitate large, unexplained transactions in cryptocurrencies, the bank might question the source of funds and freeze the account until they can confirm the legality and intent of the transactions. This is particularly concerning if the investments aren't properly documented or disclosed, which could lead to more severe action. To avoid falling victim to this, it's important to engage in high-risk investments with regulated platforms and always ensure your financial transactions are transparent. Keeping thorough records of your investments and being prepared to provide documentation to the bank can help reduce the risk of your account being frozen. If you're unsure about any high-risk investments, it's best to consult a financial advisor who can help you navigate the risks and ensure your financial activities remain compliant with current laws. Have you ever considered or been involved in high-risk investments? Share your experiences in the comments. And remember, if you found this video useful, subscribe with one click to get more important updates on protecting your finances. Number 8. Non-compliance with new laws. As laws around financial activities continue to evolve, failing to comply with new regulations can lead to severe consequences, including the freezing of your bank account. Governments are constantly updating financial and tax regulations, particularly when it comes to preventing fraud, money laundering, and other illegal financial activities. If your account is involved in a transaction or investment that doesn't align with these changing rules, banks are required to freeze your account as a precautionary measure. This could happen even if you are unaware of the changes or have not fully understood how new laws affect your financial activities. Noncompliance can occur in various ways: failing to report foreign assets, engaging in transactions that fall under newly defined high-risk categories, or not adhering to newly enforced anti-money laundering (AML) standards. If banks spot any discrepancies or violations, they are obligated to report and act on them, even if it means freezing your account temporarily. This can be frustrating, as you may not realize what you've done wrong until your funds are locked and you're left trying to resolve the issue with your bank and authorities. To avoid this risk, it's crucial to stay informed about the latest financial regulations that affect your account. Regularly review any communications from your bank and make sure you are fully compliant with national and international financial laws. If necessary, seek legal or financial advice to better understand these new rules and ensure your account and transactions remain in good standing. Compliance is key in today's increasingly regulated financial landscape. Are you aware of any new financial regulations that could affect your accounts? Let us know in the comments. And if you don't want to miss out on essential updates, subscribe. Just one click to stay ahead of the game. Number 9. Digital wallets and cryptocurrencies. With the rise of digital wallets and cryptocurrencies, financial institutions are increasingly cautious about transactions involving these assets. While cryptocurrencies like Bitcoin and Ethereum have become more mainstream, they still remain volatile and less regulated compared to traditional currencies. If your bank notices that you are frequently engaging in crypto transactions, especially those involving unregulated or obscure coins, your account could be flagged and temporarily frozen. The anonymity of crypto transactions can raise red flags for banks, which are required to ensure that all activities comply with anti-money laundering (AML) regulations and tax laws. The regulatory uncertainty surrounding digital currencies adds another layer of risk. Although some cryptocurrencies are becoming more widely accepted, they remain subject to fluctuations in value and regulatory crackdowns. If your account shows patterns of transactions that appear to be related to illegal activities or unverified crypto exchanges, banks may act quickly to protect themselves from potential legal liability. In some cases, the mere association with unregulated cryptocurrencies could be enough to trigger an account freeze, leaving you with limited access to your funds while the issue is investigated. To minimize the risk of your account being frozen due to crypto-related activities, it's important to use reputable exchanges and platforms that comply with financial regulations. Always document your crypto transactions and avoid engaging in risky or unverified exchanges. Additionally, it's wise to consult with a financial advisor or tax professional to ensure your crypto dealings align with current laws and regulations. By taking these precautions, you can continue to use digital currencies without jeopardizing your financial freedom. Have you used cryptocurrencies or digital wallets for your transactions? Share your experiences in the comments. And if you found this video helpful, don't forget to subscribe. One click to stay updated on how to protect your financial assets. Number 10. Global economic factors. Global economic instability can play a significant role in the freezing of bank accounts. During times of financial crises, recessions, or market crashes, banks and governments may take extreme measures to safeguard the financial system. One of the actions they may take is freezing accounts in an attempt to prevent a run on the banks, where large numbers of people try to withdraw their savings all at once. This is often done to maintain liquidity within the banking system and prevent further economic collapse. During such periods, individual accounts, especially those with large sums or irregular activity, could be targeted as part of efforts to stabilize the economy. The rapid changes in the global economy, influenced by factors like inflation, rising debt, or geopolitical tensions, can lead to sudden shifts in financial policy. For example, if there is a currency devaluation or economic sanctions imposed on certain sectors, individuals with accounts connected to these high-risk areas might find their funds frozen. In this case, banks will prioritize safeguarding the broader economy over individual access to funds, and your account could be caught up in the chaos without warning. To protect yourself from these types of freezes, It's crucial to monitor the economic climate and adjust your financial strategy accordingly. Having emergency savings, diversifying your investments, and ensuring that your assets are spread across different financial institutions can provide a buffer against such freezes. Being proactive and understanding the economic landscape and how it might affect your finances will allow you to take the necessary precautions before a crisis hits. Are you worried about how global economic factors could impact your finances? Share your thoughts in the comments. And if you want to stay informed and protect your savings, don't forget to subscribe. Just one click to get essential updates. As we've seen, the possibility of millions of Canadian bank accounts being frozen in March 2026 is not just a theoretical threat, it's becoming a reality for many. From government crackdowns on financial institutions to the complexities surrounding high-risk investments and cryptocurrency transactions, there are multiple factors that could jeopardize your access to your own funds. The ever-evolving financial regulations, combined with increasing scrutiny from banks and global economic shifts, mean that your financial freedom is under constant threat. It's important to recognize the potential risks in order to proactively safeguard your assets. Taking steps to stay compliant with regulations, regularly updating your personal information, and avoiding high-risk or unregulated financial activities can help reduce the likelihood of your account being frozen. Additionally, being aware of global economic trends and understanding how they could affect your bank accounts can provide you with the foresight to adjust your financial strategy. Whether it's through transparent financial dealings or keeping emergency funds in place, there are ways to protect yourself from being caught in the chaos. Your financial security is ultimately in your hands. By staying informed and taking proactive measures, you can navigate the increasingly complex world of finance and avoid the risk of your account being frozen. Remember, knowledge is power, and the more you understand about these risks, the better equipped you will be to handle them. What steps are you taking to protect your bank account from being frozen? Share your thoughts and experiences in the comments below. If you found this video insightful, subscribe. It's just one click to stay informed on crucial updates that could protect your financial future.